Hey everybody, it's Barron Shannon from alphatrends.net. It's Saturday, the 23rd of February 2019, and the markets had another strong week. The only exception was the Biotechs. They broke a little resistance and pulled back like we were hoping they would. The TLT, which is the bonds, they were down a little bit in energy, but otherwise it was another positive week for the broader market indexes. So let's take a look at the charts, and we'll start with a daily chart of the SPY. Once again, I want to point out that we have a potential level of resistance up ahead. Now, it might become resistance. We do not know. Nobody knows if it will be resistance. So we're looking at it as a potential area where supply might be able to overwhelm the demand that we've seen, this very strong demand from the December lows that's gone through every prior potential level of resistance. It's a healthy uptrend, and on the 30-minute time frame, we continue to see that we're making higher highs and higher lows with a rising 5-day moving average. So the buyers continue to be in control. What we want to focus on, I think, next week is this level right here. 276 is our key intermediate term level. As long as we remain above that 276, then we continue to give the benefit of the doubt to the buyers on the intermediate term time frame, and we can expect that the higher prices are most likely because this trend has been established. And as we know, once a trend has been established, it's more likely to continue than reverse. Breaking below the 5-day moving average gets us cautious. We only become bearish if we start breaking down and making a pattern of lower highs and lower lows. The NASDAQ is up beyond that 61.8% retracement and at that 200-day moving average. A lot of people were looking to short it and thought they had the short right because it backed off there for 2 days. But the fact is, we continue to make higher highs and higher lows on the intermediate term time frame, which is the primary time frame that I'm interested in. Next week, 170.5 is the key level here, and then we will look at other prior consolidations zones as levels of potential support if this market pulls back. Right now, there's no evidence that it's set to. The Russell 2000 has made it up to and through that 200-day moving average on Friday. So we've been talking about maybe this is the market that will get most extended and then perhaps show some sellers. We see that this Russell 2000 is up 18% year to date. Semiconductors are up 19%. But let's go back to that daily chart. We're at a 200-day moving average. That's a potential level of resistance, but we see zero evidence that there are sellers gaining any control here on this 15-minute time frame or on the 65-minute time frame. We see a market in an uptrend. It's getting extended. It seems like it's up too much, but you're better off being on the sidelines in cash, wishing you were out, than trying to short this thing because you think it's up too much. Semiconductors, as I said, up the most this year, and this group has been super strong. Maybe they're heading for this trend line. The 200-day moving average meant absolutely nothing to the semiconductors, and right now they are still in this primary uptrend. I think that on an intermediate term time frame, about 102.25 is what we want to see continue to hold. The Biotechs, as we noted, we wanted to see that they would break this level and then pull back. Buying a market that breaks out after it's extended, as this one did become from 106 to 112, is a fool's game. We want to see it pull back, stabilize, and then purchase. So let's see what that looks like on a shorter term time frame. We broke down, so this was the breakout. We broke down lower highs, lower lows. We need to consolidate in here a little bit, I think, early in the week. Maybe we can see something exist. Let me just get my trend tool correct here, and what we'll do is make a little bit of room so I can draw a potential scenario. Maybe it does something like this for a day, day and a half, and then that it makes a higher low where we can measure risk against. And when we say measure risk, that means place a stop under whatever the most recent relevant higher low is for the time frame that you engage the market. Financials also heading for that 200-day moving average. Their momentum slowed a little bit here late in the week, but I think a key level is probably about 26.25 there. Apple, as I had noted in the on Twitter, The volume weighted average price from the earnings has been absolute money. If you think that the anchored VWAP is not being used by institutions, you are absolutely incorrect, because they are defending the average price since that event there. So keep an eye on that one. That's going to do it for me. I'm headed back to Chart Summit right now. I'll be presenting there this afternoon. Thanks to you who made it, or will eventually see parts of it online.